Good afternoon. Welcome to this week's Wednesday Market Insights Sonar webinar. We're going to get started here in about a minute. First, we're going to do our Happy Halloween wish and also our quick intro of our Halloween costumes here in the room. We have Pippi Longstocking over in the corner. We have Lady Gaga here on the mic. And what you typically know as the Sultan of Sonar is actually Charlie Brown. And myself, Bugs Bunny, Space Jam, Toon Squad. Okay, we're going to go ahead and get started here. Usual, Zach Strickland, a.k.a. Charlie Brown, and Brad Ganane, Bugs Bunny, for Halloween Market Insights edition. We're going to keep it to about 30 minutes once again, and we are going to open up for Q&A. For those who are new here, your Q&A bar on the top of your Zoom meeting, top bar there. First thing we want to start out with is just a quick announcement for those of you on the webinar that are Sonar subscribers. You've probably seen the daily watch that has been going out. We're pretty excited about having that daily publication to our Sonar subscribers, where we have macroeconomic expert and Ibrahim Bayan, our chief economist. We have our oil gas markets expert, Mike Mitchell. Zach here is pricing and finance. I'm not really sure how he got on that team, but we'll listen to what he has to say every now and again. We have our in-house meteorologist, Nick Austin, and our futures trading and data analyst expert, Michael Crosby. And again, they're providing daily updates through Sonar, through the data, what's happening. Again, this is going out to Sonar subscribers. And I think we've been getting some good feedback, and we're excited about having a little bit more engagement and information that we're providing. Also, we're coming up here in about a week and a half, November 12th, 13th, on FreightWaves. We do have our Sonar training. So we're excited for all of you who've signed up so far. If you're interested and would like to attend, you can find us on our Sonar website, freightwaves.com/sonar, and contact us that way via sales@freightwaves.com. But with that, we're going to jump in to our most recent added data sets. To start, Zach's going to run us through. We're also going to talk a little bit about the truck data set, and then we're going to talk about what's coming next week and open up for Q&A. So, and we're going to do a little market, little market teaser update as well. So I'll let Zach get started with what's been added as of Monday of this week.
So this week we've added two new essential sections, I guess groups of information into Sonar. Last week we added energy, the energy commodities. This week we're adding the agricultural side of that. Most of these are monthly values. Some of them are price, some of them are production values. So you'll get volume along with price. And a lot of these are essentially, well, the reason we put these in here, I'll go ahead and start with that, is the fact that agriculture has a huge impact on freight markets in general. Everybody has heard about produce season, but there's also a lot of many little seasons in trucking in general, and a lot of those are directly impacted by these agricultural commodities. I think the most questions I get asked are about, well, what commodity is coming out of El Paso? What commodity is coming out of South Florida this week that's creating this capacity crunch? Because they tend to come out in spurts, like these 2-week seasons, and all the trucks in the area disappear. And the reason that these, capacity kind of dries up around agricultural commodities is because they pay so much better, because they are very timely. Anytime that you have a time crunch on something, the rate goes up, because they have to move all of these harvests out of their respective warehouses or farms or silos or wherever they are very quickly, or it will go bad and that product will no longer have any value to anyone. So a lot of small carriers, a lot of owner ops will go out and basically contract out to carry sweet potatoes for a period of time. They'll carry edible beans, bananas. You can see what I have pulled up here is in the agriculture section of Sonar. And one thing, just on a quick side note that I'm going to point out, is that we are going to actually reorganize some of our chart categories here in the near future. Hopefully that'll make it a little bit more easy to locate some of these indices, make more logical sense. As Sonar has kind of grown, we've kind of, had to throw some things together and put things in places that may not make as much sense anymore as other values have become, added into Sonar itself. So look for that in the coming weeks as we try to make this a little bit more intuitive on how you search for things. Agriculture, of course, is pretty clear cut. But I think we do have things like alcoholic beverages and vodka is in here. Again, these are derivatives of agriculture, but I don't know if everybody really thinks of them along the same lines. I have one of the agriculture indices pulled up here, and this one's kind of near and dear to me because I lived through the egg crisis of 2018.
Please tell me more.
Yeah. I mean, I think a lot of people probably don't want to walk back down this path, but the price of eggs this spring, right around Easter, shot up. And I think you know why, Brad. Do you remember what happened in the early part of the year, right around Easter, just in time for the Easter Bunny to not have enough eggs?
I'm going to go with the ELD mandate, but I think I could get a little creative with that, but we'll stick with the ELD mandate for right now.
No, you're wrong. You're very wrong.
What?
Yeah, you get no points. So what happened was there's a huge salmonella outbreak in the Roseacre Farms in North Carolina, and there was massive shortage of eggs, so therefore the price skyrocketed, as you can see clearly illustrated here, from $1.26 to $2.01 per dozen, and it went up higher and certainly in other markets and things like that. So,
well,
this is
I'm actually a entertainment bunny.
Yeah.
So I don't know.
You're not a
much. I'm not an agricultural bunny, so that's why I don't know as much about that.
You're not a service bunny.
Yeah.
I get it. So you see the price did recover, but the price obviously follows demand and supply very closely. So this is the reason that we put these agriculture type commodities in here, is because these do have a big impact on some of these freight flows and commodities, and making forecasts, especially if you're the industries that you serve are tied to these commodities.
So what can you do with this? And if you were operating, let's say you're an asset-based carrier and you had large customers or customers in that sector, what could you do potentially with this information and monitoring?
Essentially, if you're monitoring some sort of agricultural price and it's trending up, there wasn't a lot you could do about the thing that happened here in the early part of the year because it was so immediate. Mm-hmm. And so widespread. That's not normal. That's not a normal thing that you would be monitoring. What you should be monitoring, though, is this right here, kind of the price of eggs moving up. Mm-hmm. It means that supplies might be dwindling. So that means that if you're hauling a bunch of eggs or, agriculture, any kind of derivative of eggs or any of that, you might be hauling less upcoming because there's something that's happened to the supply that is not necessarily meeting demand like it was before. So you can then put that into your forecast and say, well, we think that the, eggs actually, or you can actually validate what you may not have known. Sure. If you read FreightWaves, you knew all about salmonella and the eggs and everything that happened here. But for those that don't, I know everybody gets busy. You can find your particular industry's commodities that make the most sense, and it's available. And you can say, well, man, I thought, normally we run about 15 loads of sweet potatoes a day out of North Carolina. Mm-hmm. It's looking more like 10, 8 to 10 this month. And I go and I look in here and I look at my, my trend lines and see, well, it looks like sweet potato price has gone up significantly. Their supplies are probably hurt because Hurricane Florence has hit one of the biggest sweet potato producing regions of the country in Eastern North Carolina. Also hogs. Also hogs. Hogs are in here as well. Hog inventory and pricing. But I'm not going to go through every single commodity that's in here. There are 48 new agricultural tickers. Most of them are available monthly. Some of these inventories are available quarterly. Your corn, grain type inventories are going to be available quarterly. Again, some of these are more macro driven. you're going to basically be looking for any kind of longer run trends or validation for what you might be seeing in your particular industry.
Very good. Did we have, can we jump into warehouse?
Yes.
Really quick and do a few minutes there.
Yeah. So our next, I got to choose a market. So our next one is warehouse, asking and executed price, or effective price, I believe is what we're calling it. So I think everybody is fully familiar with how over the last several years, some of like this little company called Amazon has popped into the market. I don't know if everybody's familiar with them or not. But essentially what they've done is they've kind of redesigned supply chains and short haul management processes to the point where, everybody needs to be thinking about how to service the end user or end customer more quickly, more rapidly. That's created these shorter haul networks. That way they can actually put the SKUs they can focus in a certain area or certain market around the people that are going to purchase it more often. So warehouse rent is going to be a good indication of what markets are growing, what markets are kind of falling off, where are areas that I can find deals, things like that. So, and it's all, the granularities are all market. The asking price effectively is what they're, the supplier of the warehouse is asking for this price. The effective price is what they're actually seeing, on paper. So as asking price exceeds effective price, the relationship there is essentially that the market may be a little overheated, or undervalued. I'm sorry. It may be a little undervalued, and you might be able to jump in there and take a deal. And if the converse is also true, where if the asking is under the effective, that market is probably overvalued and kind of falling off. Things of that nature. I know in my previous life in trucking, we evaluated where to put terminals and warehouses all the time. We were trying to figure out where the best locations were for us to run our operation, where we could target areas that we could effectively service with the trucks, but yet not have to pay a premium to operate in close proximity to anything. So the warehouse rent, very unique. I think it's, a lot of users are going to get a lot of value out of that one because of the way that, you may not be, a commercial real estate expert, like we weren't in my old place, but I had to do a lot of kind of shorter term evaluations of where we were putting places as a financial analyst, in any kind of, supplier or supply chain management situation. You always should be effectively managing, where your warehouses are placed and how, are you in an area that you might be paying too much? You might need to relocate. Of course, relocation is a big expense, but still.
And I think another way that we can look at the warehouses via percent availability. And I think that's an interesting one. I think we were looking at earlier today, was it Memphis and Nashville, and the percent warehouse availability, and then just kind of tracking supply and demand essentially. And of course can be tied to these price trends as well. But I thought that was very interesting, the vacancy rates, and just comparing Nashville, of course, because it's, an area that's really grown over the last several years. And what are we looking at here?
So Nashville versus Atlanta. And you can see that Memphis versus Memphis. You can see that Nashville's actually, you can see there's a little trend line moving up here as rent in Nashville's going up a good bit. Memphis is kind of trending down and continuing to go down. Nashville property rates, of course, are getting extreme. Again, you have to keep in mind the area that this encompasses. It's not all Metro Nashville. Right. It's also the surrounding area. These are still offered in the granularities based on, these key market areas. So you do have places like Columbia, Tennessee, which are not in the middle of Nashville, Tennessee. But still, it's good to see these kind of short-term trends. It's like, hey guys, the property values in Nashville, they're going up.
Right.
That
Yeah,
type
no,
of
I
thing.
think it's a really helpful,
Yeah.
interesting group of data, and I think valuable. I mean, probably our brokers aren't going to really care too much or look at this, but certainly our
Well,
shippers and our carriers will.
some of the logistics companies certainly have an interest in it, but not necessarily the straight freight broker.
Sure.
Yeah.
Let's jump into some of our bigger movers over the past week. I know, was it Austin that we wanted to discuss really quick, and kind of what happened there, or maybe what was driving their spike in volume. Just give a quick market, couple different regions that we can look at.
Actually, I'm gonna talk about the USA real fast.
Whoa.
I'm gonna go a little bit bigger picture here, just because I want to.
Okay.
So I've pulled up the outbound tender volume index. For the Sonar users out there, you guys should be watching this one every day. This is kind of one of the first places I start, just because I want to know, volume is the simplest and most easily understood thing that I can break freight down into. Anytime you have surges of volume, that tends to increase the odds that the capacity itself is going to decline and destabilize in any given situation. What we've had in October has been a very slow decline, kind of a, not a, if you're a carrier, it's not a great month, not a terrible month, but you're certainly not seeing the operators are probably loving it because they can effectively manage their networks, but it's not going to drive up any rates for the brokers out there. And the shippers, of course, probably love it because they can get their loads covered without too much issue. Well, we're about to hit a time of year where things get a little bit haywire. Retail and all that pre-holiday shipping madness is about to start here in the next few weeks. We are starting to see kind of an inkling of something happening here on the tail end of this. You see it jumps up. This is just a 2-day jump from 96.95 to 98.25. So it's almost a 2% jump in volume itself in 2 days. That is very significant. You can see, this thing does not move 2% very rapidly. You have your moments here in the beginning of October and the end of the third quarter where things fell off rapidly. But you do not see these kind of short-term, quick upward movements. We see it here in April a little bit, but this to me is kind of like we need to be paying attention because there are certainly things that seasonally happen every year. I don't know if y'all know, but Thanksgiving and Christmas happen every single year. I mean, the way that I've looked at a calendar, they don't delete it off there, but there's certain seasonalities of freight that just don't go away, and one of them is the retail season. Now, what we don't know is kind of the magnitude of what this is going to mean. But for anybody out there that's looking at kind of the macro freight market itself, the outbound tender volume index is starting to show signs of kind of turning up a little bit. And on that same note, the key market of the week, for me at least, that I'm going to be watching actually over the next several weeks is Los Angeles. A lot of people have kind of heard about the port volumes. I mean, some people probably haven't if you're not following the ports, but we had a record volume of inbound container freight in the Western ports in September. That freight eventually has to go somewhere. A lot of it goes rail, but Los Angeles is a quirky kind of port city where a lot of that outbound freight does end up on trucks going across the country. There is, I think we've actually seen that, and it's been so significant that the maritime carriers have actually gone as far as discounting rates going through the Panama Canal to the eastern ports. Again, if you've been reading FreightWaves, you'll know that they have actually seen a significant drop in the spread between the West Coast, the inbound West Coast rate versus the inbound East Coast rate. And what I've pulled up here is the Freightos Baltic Index Panama spread. And what that is the difference between, you can see it up here highlighted, China to North American East Coast versus China to North American West Coast. So as this rate goes down, the East Coast rate, which is typically higher because it's going a further distance,
Mm-hmm.
is actually decreasing because they are discounting the containers on those ships because there's room on the East Coast freight. There's no room on the West Coast freight. So as this goes down, this spread gets lower and it becomes more economical to actually ship to the East Coast versus the West Coast, because depending on where your end point is for your freight, if it's in St. Louis, for instance, you're probably going to think about moving this to the East Coast.
Mm-hmm.
I mean, you're going to lose a couple of days of transit time, but if you can stand it,
Mm-hmm.
you're going to move this freight over to Savannah, Charleston, and then, $797. You couldn't buy any truck for $797 from Los Angeles to St. Louis.
Right.
So that's something to keep in mind. And on that same note, as I'm going through, kind of my checklist of things, Savannah on the outbound tender volume has blown up.
Ooh, look at that.
It is at its highest volume since we've created the index. Highest volume ever. And I think I did
in October too.
It's in October.
The U.S. tender volume.
Yeah, here in May, which is typically kind of that was the peak container season this year, coming out of China, because Chinese New Year ends, and then this big surge of freight comes off, and it hits LA, and then eventually spills over into Savannah. All these kind of production facilities turn back on, and it creates this big influx of freight into the country. That kind of happened in May, and then all of a sudden, boom. And a lot of people are, of course, attributing some of this to the tariff concerns as they get all the inventory into the warehouses and make sure they have it. But it's also holiday season coming up. So a lot of people are predicting a pretty big retail push, a pretty big holiday season coming up, which is a reason to watch port volumes pretty closely over the next couple of weeks. Savannah blowing up right now, though. That's a tremendous jump. So if you're in the Savannah market at all, like, you can know that you're going to have trucks moving out of that market, or in and out of that market.
No, that's very, very interesting. And I think we're going to talk really quick too. I don't want to change lanes too quick, but I know we're getting a little bit close on that 30 minutes that we're trying to stick to. We wanted to kind of talk about a little bit your methodology of how you think of and how you use the truck index. And it may be good to, I don't know if you want to stick with Savannah with the truck index. I'm sure you can probably correlate to some extent what's going on. But yeah, I think it would be helpful just to explain. I know we've talked about what it is, but how can you, I think it's easy to understand what it is, but how can you use it, and what is it really telling you? Because we're not showing actual truck availability, right?
No. This is not truck availability. This is simply truck movement into an area, truck activity, if you will, in an area. On a national level, there's not much you can gain from it. You're not going to gain like, oh gosh, the market itself is exploding with new trucks. I mean, you can glean some of that in there, but for me, the biggest use case for this is on a market level. As you kind of can see, Savannah has had a lot of trucks in the market relative to where it has been over the last several months. That means you got a lot of trucking activity. And we do have upcoming, I think we want to tease kind of some improvements to the UI itself coming up here shortly. I'm going to take everybody on this webinar on a special little trip.
A Halloween
treat, if you will. A treat. Man. Yeah.
I'm excited.
And I'm going to take you into our dev site. Yeah, things are getting real fast. So I'm going to pull up two things, and I'm going to go ahead and kind of shrink this one for now, because I want to save some time by having it up. But so our map feature is getting an overhaul. And what I'm going to show you is the truck index. I'm going to stay in this truck and market index. And so two things, and I'm going to show you another indice here in a little bit. That'll reveal another improvement, a second treat. So the truck index is effectively, the darker the blue, the more truck activity in that specific market. Now, on a map, looking at it as it stands, yeah, there's a little bit of value there. You can see it, but it's relative. It's relative to the overall market, and it's relative to itself.
Mm-hmm.
So as things kind of go up and down, it doesn't mean Grand Junction is exploding with truck activity in relation to America. It's just got a higher value in it as relates to itself. So that's a very complicated thing to understand. Like I even have trouble explaining it, as you just heard. But one of the things that we're about to do in the map is effectively make it available where we can change the date of the data. So over time, you can kind of see where the trucks are moving. And I think this is probably one of the most interesting things, because you can see how things kind of move in and out of areas. When was the hurricane? It was sometime Florence, or not Florence, but Michael, whatever. You see trucks right here jumping into Florida right after the hurricane. I believe it was like around the 14th or so. This to me, if I can find when it was actually hitting, this to me has potential to be pretty useful in telling, like, well, how much trucks are in my area versus the average, and based on an April 1st start date, which is when all the when all ELDs had to be turned on. So that's why we kind of started it there. But I'm going to show you, while we have enough time, I don't want to miss this next one, because this is one of my favorite features that we've just added, or we're about to add here in the next week or two. And if I can find my head haul index.
Oh, there you go.
You can see that we've made since we have negative values, and this is only going to work on the indices that have negative value. It'll go from this deep blue to a dark red, and the dark red is basically the negative value. So it makes the map a lot more easily kind of understood and read when you see negative values, which for the head haul index indicate a backhaul market. So that's very hard to get trucks out of this market because there's not enough freight. There's more inbound than outbound. And these blue regions have more outbound than inbound, and they are in relation to the inbound load. So it's not necessarily that Memphis is got the most outbound in the country.
Correct.
It's just, right now it has one of the highest relationships versus their inbound.
And I think that's a great segue into your talking about not the highest actual outbound, but what is the next chart going to show, I think is a good segue into the table here and showing how.
Boom.
Oh, there you go.
So this right here is what we call a tree map. And what it's doing is it's putting the biggest numbers, or the biggest valued markets for that specific indices. And we have the outbound tender volume index pulled up here. So Ontario, California right now has the largest value of, if you look down here at the value number, it's 444.35. So that's what the size of this box is kind of representing. As you get further down here, Austin, for instance, has a value of 15.4. So not a lot of volume, not a lot of volume in that particular market. Atlanta has a big square. And then the red values, again, just like the map, indicate negative, and the green values indicate a positive change, if you will.
That's awesome.
So
Go really quick, show the scrolling ticker too. That's probably my favorite thing.
Your favorite thing.
It's my favorite.
So I'm just going to edit this guy.
So yeah, keep the same.
Yeah. And then we're going to do scrolling ticker and save.
And you can size it too. Yeah.
There you go. So for those of you that create your own dashboards, this is a fantastic tool. I know I have my own dashboard that I look at every day. I'm going to be putting this on my dashboard for sure, and my favorite values.
You can size it too, if you add a map, it can be across your top bar. Essentially, if you drag and pull. So
you can create your own, like I said, your own little dashboard where you can pull where it's going, so you can kind of evaluate what's most important to you over time. And that's roughly all the time we have this
Yeah,
week.
I think that's all. October 10th is when Michael hit, by the way.
October 10th. Oh, thank you.
If you want to go back.
Well,
we actually got help from the audience on
thank
that.
You.
Full
Thank you
disclosure.
For that.
Full disclosure. Awesome. And then I don't know if you want to talk a little bit about, while we open up for questions here for the last 5-10 minutes, if we receive some, if you want to talk about leading into next week as well, the rail traffic origin. I think that's going to be something that a lot of people are extremely interested in. Or do you want to save that for next time? I'll let you decide.
Well, we're kind of running up on time. I mean, what we're going to have is rail traffic origin, and it's going to be organized by commodities. So it'll be where, you have X amount of, I mean, it's all going to be rail driven, obviously, rail traffic origin. So you'll be able to have another kind of, and these are going to be more significant in the way that they're actually moving commodities. They're not stagnant inventories or anything like that you have to kind of derive information from. They'll be moving, they'll be on the rail. And from that, you can kind of infer, again, your own kind of, if you drive a truck that's hauling a bunch of eggs, and not that I don't even know if they haul eggs on the rail. That seems difficult. But say that you see, the rail volume of eggs are shooting up, you can make some kind of decisions from that.
Sure. And that'll be next week. And then before we go as well, just impromptu, two shout outs to markets to keep an eye on over the next week until we're back on the air. What do you have for us?
Oh, well,
put you on the spot.
Man, you did.
I'm just continuously putting you on the spot.
Well, I already kind of threw out my market to watch over the next few weeks.
We'll let you keep that.
I was going to say, LA is like my key market for this time of year. I mean, that's the one that, and of course, Savannah. I mean, okay. LA and Savannah are kind of the market.
Easy way out. We'll accept that though.
You know what? I'll throw you out another nugget.
Okay.
I mean, I want to know what's happening in Dallas. I mean, not Dallas, but Chicago, Joliet area over the next little bit. They have a lot of intermodal presence. All these containers got to go somewhere. Mm-hmm. One of the biggest rail lanes out of LA is going to Chicago.
And going right into, as you mentioned earlier, going right into retail and a very busy time of the year.
Huge time of year. The closer you get to Thanksgiving, the higher the rates go because it is very service dependent. As that window of service narrows, the prices go up. So it doesn't necessarily have to be a huge amount of volume to make an impact in the spot market over the next several weeks. Mm-hmm. So literally any uptick whatsoever in any kind of market where there's not enough trucks is going to be exposed. And especially even if they have a ton of trucks in the market, not all those trucks necessarily are going to be able to get it to the place that, the freight needs to be on time. So you are going to see kind of this inflated spot market, not just based on volume or capacity, but also based on service requirements coming up.
I like it. Mm-hmm. Good stuff. I think we don't have any questions. It doesn't look like. Again, if anyone out there who's not already signed up for FreightWaves and our SONAR training on site, we're really excited to engage face-to-face. Zach will be there giving some training sessions, I believe. Maybe they might allow me to do a few. I'm not really sure yet. They might allow that.
I'm kind of a big deal now.
You are, yeah. You may be overseeing everything. I'm not sure. But yeah, so we have that at FreightWaves November 12th and 13th. Contact us if you're interested in attending and signing up for the SONAR trading. We'd love to see you there. You can reach us at freightwaves.com/SONAR or at the email sales@freightwaves.com. And I believe we will see you all next week. Wednesday, 2 p.m. Eastern again.
Yeah, I think we have one more week.
One more week
before this series probably takes a little break as we do FreightWaves.
That's true.
Because I won't be here. Yeah,
that's true.
So, and then Thanksgiving is right after that. So it'll be a 2 week. It'll be a 2 week break.
That's true.
At minimum.
That's sad to think about.
Yeah. So yeah, one more week. Tune in next week. Same bat time.
Sounds good. Thanks, guys.